quite like that funky music. Good morning and welcome everyone to episode 19. Yes, it's 19 of Mortgage News Live, coming to you from a slightly ill and feeling sorry for myself, cupboard under the stairs in Radlett. Sympathy, please. No? All right, never mind. Thank you for joining us, and thanks as always to our sponsors, MPowered. We have a great show lined up this morning where we will be discussing the post-election environment with a star-studded cast. So, as dawn broke on Friday, Labour celebrated a resounding election victory, winning 412 seats and leaving the Conservative Party to face its worst parliamentary defeat in history, 121 seats. Proving that bungee jumping, falling into lakes and silly stunts do work, the Lib Dems won a massive 71 seats, whilst pantomime villains Reform sadly got a good share of the vote, with Farage finally getting into the House at the 8th time of asking. So what of Labour and housing? Well, they've promised to bring back housing targets, build 1.5 million homes, give first-time buyers first chance to buy homes, make a permanent comprehensive mortgage guarantee scheme to help first-time buyers, and update the national policy planning framework, building on grey sites and opening up parts of the green belt, as well as building a new generation of new towns and more social and affordable homes. It's a big old shopping list. For now, these pledges remain aspirational, though. But if Labour can deliver on its promises, we could see a more stable and accessible property market. In the meantime, lenders have been cutting rates, which we hope to continue in the lead up to the interest rate decision on the 1st of August, offering some relief to those remortgaging or buying for the first time. If a cut does come in August or later September, the pent-up demand that will be released will turn a small snowball into an avalanche of activity. But make no mistake, much hangs on the shoulders of the Bank of England, with lenders waiting in the wings to charge into a competitive battle and buyers also eager to enter the fray. A further overcautious misstep will leave the governor with some serious questions to answer. But before I witter on too much, and I feel I probably already have, it is time to introduce the outrageously talented array of superstars lined up on my proverbial couch that make up this morning's panel. Joining us are Sarah Tucker, CEO of The Mortgage Mum. Hello, Sarah.
Hello.
Richard Merritt, the MD of Alexander Cole. Hello, Richard.
Hello.
Rachel Loomis, Director of Express Mortgages. Hi, Rachel. Welcome back.
Hello. Thank you.
And also returning is a wonderful Amanda Symes-Reeves, a product manager from MPowered. Welcome back, Amanda.
Good morning, Monty. Morning, everyone.
Good morning. So, sorry, my introduction was a bit longer this time, wasn't it? I get carried away. So, first off, commanding win. 412 seats to 121. Is this the stability we need? And how have your clients reacted to this? What have you seen? Is it all, yay, it's over and we can get on with buying houses? Rachel, let's come to you first.
Thank you for putting me on the spot and going first. Yeah, I think it's all really positive. I personally feel positive about it. To get that out of the way. I do think that it feels better. We've got lots of business going on at the moment. It did feel that some clients were waiting, but it feels like everything's going to be back on and we're going to be really busy again before you know it. So yeah, I feel positive, and I think everyone around that I've spoken to so far about the results feels the positivity too. Definitely.
Good. Same with you, Sarah?
Yeah, I echo Rachel's comments. June was quiet, and that's always unsettling as the owner of a mortgage business. You're like, how long is it going to go on for? How quiet are we going to be? So we already saw an uptake in leads on Friday. So I think people have been waiting patiently for some stability and will move quickly from here. Particularly first-time buyers, I've noticed, they were really waiting, and they were patiently waiting anyway, far longer than they wanted to most of the time. So we're definitely seeing a lot more activity from them as well.
And Richard, you echoing that? Obviously, you've got the estate agency branches as well. They must be really really pleased that some stability.
I was dusting off the old D-Ream CD and sticking on things now and again. I think, in all seriousness, I think between the overwhelming landslide of the victory and the fact that irrespective of anyone's party politics, it felt like the country was just ready for change. I think the fact that we've got change, no matter what you think of the leader, no matter what you think of their manifesto, their policies, the impact of housing, the markets like stability. We've got stability. The worst thing that we could have had is a hung parliament off the back of the Tories losing power. We are certainly seeing positive sentiment in the market. The Foxton sales performance actually didn't slow down in June. As Sarah said, from a mortgage perspective, we definitely felt quiet from sort of applications and interest, and there was a much more wait and see attitude from consumers. But the Foxton sales side has been flying. I think that's more to do with them taking market share though than overwhelming market sentiment. But I do think that will continue into the second half of the year now.
Yeah, so the markets like stability, don't they? And we've seen, Amanda, swap rates fall a little bit after the election, and some lenders begin to cut rates. Is it the same welcome for you guys as well as it is for us to have a little bit of stability, and hopefully you can then, it's easier for you to price, isn't it? And hopefully we're going into a rate cutting environment again.
Absolutely. And do you know what? I stayed up watching the election. And if I dare say, when I saw Liz Truss not getting her seat, re-elected into the seat, there was a cheer. It was like brilliant. Despite your party politics, I think we've all lived through that, haven't we?
Yeah.
With Liz economics and what happened since then. So what a welcome relief, despite your, whoever you voted for, to actually have that stability, being seen with, Labour coming in as well. So yes, a huge welcome relief on that. And we're seeing that reflected in the swaps as well. They'd gone bid up before the election. There was a little bit of turmoil, just in case, what was potentially discussion of a hung parliament. But then, it's come back down, and we've just seen it settle there. Now, it's interesting seeing what's happened with the interest rates. Those changes from lenders yesterday, they would have been priced in before pre-election.
Yeah.
But we've seen that swave there. So it'll be interesting to see what we can do going forward. On that, but I'm sure we'll have a bit more further chat on that as we go through this morning.
Yeah, and just a reminder to people watching, we do have comment section. If you've got any comments, questions, there you go, as if by magic something popped up. Our panel industry pros are here to answer your post-election questions. What would you like to ask them? There you go. So crack on there. So yesterday was interesting. Then we've seen the cabinet come and go, get stuck in. They all look very serious and getting on with their jobs. And we heard Rachel Reeves, our first female chancellor, speak yesterday and she spoke about, we're going to keep our promises. We're not increasing taxes. We're focusing on growth and especially house building. So she spoke about unclogging planning, opening up grey belt land and taking on the NIMBY, people like me, to get Britain building. Initial thoughts, Richard? What did you make of of Rachel's first foray into this?
So I think the sentiment is correct. They need to restore trust. Amanda just touched on it, but what the Tories did is lose the trust of the country for a number of different reasons, and the economy probably the largest. So I think coming out and being on the front foot of saying you're going to keep your promises is the right message. The building homes is also the right message. Stock is the biggest challenge that we've had in the housing market for a generation now. Doing it, though, is going to be the challenging thing. They've pledged to build 1.5 million homes over 5 years. And I saw an article in one of the trade press the other day on it that said that's the equivalent to building a large housing estate every single day until the next election. We don't have the space, the materials, the man or woman power to do that. So it's going to be interesting how they do it. What I'd like to see is not just we're going to build, but actually what they're going to change to enable us to develop other existing stocks. So how they encourage downsizing to release locked up equity, how they encourage the regeneration of commercial units. We've got a lot of empty office retail blocks. So they're saying the right things, but the interesting part now will be how that flows through into action, because I don't think they're just going to be able to do it by building more homes.
Anything that stands out for you, Sarah, in terms of their approach so far? I know it's really early days.
Yeah, it is really early days. I think the kids actually learnt about the election at school, primary school, which I thought was a brilliant thing. And actually speaking to your children about this stuff is actually so refreshing, because they simplify what is complicated and has all those adult emotions on top into true facts. And my son said, at the end of the day, Mum, what they say and what they do are two very different things. And I thought, I couldn't say it better myself. He was talking about the fact that they were doing things to do with knife crime. He's like, how are they going to do that? But it's a bit similar here. You can say anything, can't you? Like, we're going to halve knife crime, or in this case, we're talking about the housing market. We're going to build 1.5 million homes. But how are you going to do that? So I think it, like Richard said, it's good intention. That's what we want. We want stability. We want positivity. We want them talking about the housing market. So it's a priority, which is good. But I think it would be nice for them to share their plans and what they're going to do. And obviously, we want some support for our first-time buyers, which, again, they're pledging, giving first-time buyers the first dibs on new build homes. What does that look like? The mortgage guarantee scheme has been labelled as this exciting thing, but it's already out there. So I really want to see as well what they're going to do to support that's different, that isn't what's on the market, because we know what's on the market is already reflective of what they're saying. So it would be really good to see some new information. I was quite excited about the Help to Buy scheme being revived. I might be alone there, but I was quite excited about that, because I thought that was a really positive market thing that we had. So I'd like to see something innovative.
Yeah, the Help to Buy was quite interesting. The problem with that is obviously all the detractors will say it just inflates house prices and doesn't really get to the nub of the problem. And I think the key here is really the planning, isn't it, that they're trying to do. And it takes us into the NIMBYs situation where I'm forever signing petitions and battling for no, don't build any more here, because the problem is the infrastructure. It's all very well building 1,000 homes, but if there's no schools, there's no doctor surgeries, the roads can't cope. Does that really work? And hopefully they're gonna try and address that, I would guess.
This is where, as Sarah said, that innovation's needed. To the downsizing point, according to data for the Centre for the Study of Financial Innovation, there's 9 million bedrooms unused in the homes of over 65s. And if rather than just saying we're going to build, is there something that they can do to encourage downsizing that frees up some of that unused stock? Yeah,
absolutely. And in this environment, actually, there's a couple of questions come in. It's quite, Rachel, this is, what are you giving more general advice now regarding fixed rates? Is it still a case by, well, it's always a case by case, but do you still get a sense that there's more people want 2-year fixes, short-term fixes, rather than 5-year fixes at the moment? Or where's your advice going?
It depends on everyone's circumstances, but we're seeing that it's pretty 50-50. Some are wanting 2 years, thinking rates are definitely coming down. Some of them are sort of tell me, oh, they're definitely coming down, definitely. And I'm thinking, Liz Truss, no one knows what's going to happen. So we're securing fixed rates and saying that, you've still got a few months, we'll wait and see what happens. But then you do get still a lot that are saying, I'll go for the 5-year rates are cheapest at the moment over the 2-year. And some of them just want to lock that in and have the stability of that. So it's still really mixed. And then you will get some that want trackers as well. And depending on their circumstances, if they're thinking they may move, they'll go for no tie-in tracker when they come off a fixed rate. So it's still very mixed indeed.
And there's a few questions here. Keep them coming that we'll dip in and out of. But I just want to we'll go staying on the NIMBYs part, and it sort of goes into maybe it goes into the green agenda, not really. But what is people's view on building on the green belt? This Michael said, I'm not sure I like it as we already do enough damage to the environment. Is that actually what they're talking about, or are they talking about looking at there's these grey sites, isn't there, that like disused airfields on greenbelt land that could be turned into housing, etc.?
Yeah.
Monty, it's really interesting. Is this about this grey sites as well? And I've just had a little bit look at what does this mean, and having a look at some facts behind it. And they've said they've pledged this 1.5 million new family homes, but if you look at what's actually there of these grey sites, they don't fulfil that brief. You're not going to get that number. There's could potentially rebuilding across all of these previously built on sites, maybe like old car wash areas, things like that, old down buildings, and about 40% across southeast of England have actually got these potentials to do this, but still it's going to fall incredibly short. They've got to relook at these things and relook at where we can actually build. We're a small island at the end of the day. We're running out of space, which is the key crux of it, really.
It's interesting because I read different stats on that, and somewhere I'm sure I've read that actually only about 20% of the UK is actually built on, or something. There is space. I guess it's about finding, and environmentalists will say, actually forget grey, forget greenbelt land. There's enough brownfield sites. There's enough industrial sites where actually you could build 1.5 million homes on. So it's interesting. You do hear conflicting things, but I guess their emphasis on building the new towns and the infrastructure is what I like, really, and I think that's what perhaps they should concentrate on if that works, because no one wants to like live in a village like ours and then suddenly have 500,000 more families and everyone's got 2 cars these days, and it causes havoc when you can't get into a school in the first place. But I guess it's all about this long-term plan, isn't it? And hopefully we've got another new housing minister who hopefully will stay in situ, and so it's going to be interesting.
I'm interested as well what the golden rules are. So they've said they're introducing golden rules to ensure developments and benefit communities and nature, and that's how they will kind of caveat the greenbelt protection. But what are these golden rules? Because we've seen golden rules in government before that are unethical and actually not agreeable with most of us. I know it was a different party, but still that trust, like Richard alluded to earlier, that trust needs to be built, and these kind of inverted comma things that doesn't build trust. When no one knows what that means, only they know what a golden rule is and what's acceptable to them. So I think that raised an alarm bell with me when I read that. I thought, what does that mean?
And
you've got to build trust before you build homes, that's for sure. To the point you've just made on the housing minister, though, Monty, I was part of the group along with yourself that were privileged enough to go and speak to Rachel on behalf of the industry, and one of the things that was suggested there was to depoliticize housing and sustainability and actually take that out. I'd love to see them do something bold like that and take it out of party politics. I don't think that they will, because that's a huge step when you've put housing as such a large part of your own manifesto. But that's the sort of thing that we need, just radically different. It's been alluded to here, radically different thinking in planning, in where we build, but also in how we create a long-term future for the housing market in this country. Yeah,
and there are lots of things that they can focus on. There's a large number of empty properties. Be interesting to see how they treat the buy-to-let landlord and that whole industry. For me, it's really important that you have a really good private rental sector working in conjunction with owner-occupied and social housing, as well. So hopefully social housing is something that they really need to address. And Michelle here has put, repurposing our empty high streets for residential would be great, but would lenders lend? Amanda, is that something that you've seen, looked at? Is that an issue for lenders?
Well, I think when you look at we're expanding new sites for development, it's looking at where lows are. We know there has been building go onto floodplains, and it's lows kind of it's all about the insurance side as well. So it's combining all of that together about what would we as a collective those can we lend on that potentially, but it needs to maybe look at that when they're looking at maybe these new towns. It'd be great to see another new Milton Keynes, wouldn't it? Bit of a fan of Milton Keynes, but again that's from back in the late 60s, 70s. That was one of those key builds from previous Labour government. Can we see that happening again?
Yeah.
It'd be great to see that. And as an industry, I think we should be able to support it as well. As long as they get the site right and all the various things around it, then absolutely would fully support that.
And a couple of other points here. Do you see Labour's plans positively affecting self-builders, enabling more self-build and custom-build clients? Possibly.
Well, they're putting a lot of budget in planning officials generally, aren't they? So they're going to, by raising I've read that by raising the tax surcharge, that's going to fund, I think it was 300 new planning officers. So that should hopefully help delays. But I don't think they pledged as much as other parties in regard to self-build and supporting and how they were going to support that. Yeah.
Obviously, it's early days, devil's in the detail.
Yeah.
And we shall see. But what about what else would you like to see from a new government with a healthy majority coming in? How can they help? Our industry?
For me, it won't surprise you, Monty, that I'm going to bang on about green. But I'd like to see something that encourages retrofitting our stock. We had the can kick down the road for landlords by the Tory party previously, and just because I think landlords probably welcomed that, but that's because stipulation that was maybe not as connected as it could have been. For me, we've seen what an incentive stamp duty can be in the market. What I'd love to see is them to do something with a stamp duty rebate for homeowners who then go and do something to make their home more energy efficient. Because what that then does is
that idea.
I love that idea.
It's better for the homeowner. It's better for the lender lending on the property. It's better for the economy because they have to go and engage people to go and appropriately undertake all the work, and then of course it's better for the environment. So I'd like to see something really bold like that.
That's really good, because people, even though the pounds and pence sometimes isn't that impressive, people are so motivated by stamp duty percentages that some people have been saying to me, if Labour go in, do I need to move really, really quickly before the end of March because the stamp duty is going to go up? I mean, in reality, you're talking, it is still money to a first-time buyer, but it could be comparable to some of the incentives you're getting in the green area of the market. But I feel like it's that they are driven. It's the psychology of stamp duty as a percentage. I don't know what that is and why, but I think it motivate people a lot more, even if it is pounds over years is the same saving. I think they would be more motivated by it.
I don't think green has taken off as much as we would like. But if you look at the number of people who bought homes during the stamp duty holiday, and unless you were buying a new build, virtually everyone I spoke to was then going and doing work to a home. If they knew that what they were doing, they could get money back from the government, save money to the points you just made, Sarah, then would people have paid a little more to make a more sustainable or green choice on the work rate? I suspect they would, because I don't think people are not doing it because they don't want to. They're not doing it because they've got other priorities or the lack of available knowledge or education or even access to tradespeople and materials. If they people would do it.
Yeah. Rachel, are you seeing a lot of your borrowers still struggling with stamp duty? Is that something that comes up a lot, that actually we should address that?
Well, mostly, I mean, the first-time buyers have been fine with that. It's when we've got the buy-to-let landlords, the extra stamp duty that they have to pay, that's off-putting. So that's where I see most of my clients, upset by the stamp duty. It's not the first-time buyers.
And that's not going to change. I wouldn't have thought.
No, because that just can kill a deal completely.
Yeah.
So that's been around obviously for a long time. But it would be good, the first-time buyers, I think, is very important. But I think that was a great idea from Richard there. That would be incredible, Bill, because we have seen some lenders, they do tiny little things for EPC. If you've got an A or a B, you get a tiny little deduction on the rate. Virgin's brought out something I haven't had a chance to read today with regards to retrofitting cashback to do that. So I think some more ideas around that would be really good. You'd sort of kill two birds with one stone, wouldn't you? Because people are interested to a point, especially if there's cashback. That would make them interested, or some sort of stamp duty incentive.
I think they are, and I think Richard, we need to see the green agenda back in the heart of government, which I think it will be. And Scott's had another idea. Scott Taylor Barr said, could council tax be linked to EPC ratings? So there's another interesting idea.
Beyond green, though, I mean, first-time buyers have just been touched on for stamp duty. I actually think they should change stamp duty above $1 million again, because if you think about the cost now on stamp duty for someone moving above $1 million, most people that I know, most customers, a lot of people who have just ended up in £1 million homes because they haven't moved for ages. They're not necessarily uber wealthy. But what that's done is it's acted like glue in the market. And I agree with what Rachel and Sarah said. First-time buyers, actually, there's a lot of stuff there to have helped them with stamp duty over the last period of time. What we now need to do now is encourage moving and encourage the freeing up of stock. And if it was cheaper for people at the higher end of the market to move, that would then cascade down to make more stock available for first-time buyers, in my opinion.
Yeah. And putting that, a lot's been talked about for last time movers to have that stamp duty burden lifted, but there's all shifting stamp duty onto the seller rather than the buyer. There are lots of different ideas, aren't there? But it will be interesting to see if they move that March deadline, because that'd be very, very unpopular for them just to say no. For first time buyers, it's going back down. And for everyone else, it's the nil rate band is going back to 125 grand. So
I suppose we have to wait for the budget, don't we? And see what's in there. See if there's anything regarding stamp duty. That's a whole other show, a stamp duty. You could discuss it all day, couldn't you?
A stamp duty show. They'll be queuing up to view that one.
Yeah, and people actually wait, or you get the other side when they did the changes and someone's just exchanged and completed a week before, they're gutted, and they wouldn't forget that for years to come. I still have clients that moan about just missing out now. But that's huge, and that does, stamp duty definitely gets the market moving, doesn't it?
And
it does.
One thing I want to talk about, Amanda, is this talk about a permanent mortgage guarantee. Does this actually make a difference for lenders? Does it help?
Well, it all really depends, because it depends on the appetite for different lenders with different funders, and basically what loan to values they go to. So if you've got quite a few in the specialist field as well, don't go to those high LTVs of 95% anyway, so that they often don't offer such schemes. So those are kind of out of the market on there, but it is. And we look at when the original mortgage guarantee scheme came out, there was a couple of lenders who picked up with that and run with it and done absolutely brilliantly with it, but not all of them did. So I think there's quite a lot of different factors in there with their picks up on the scheme. Sarah mentioned earlier about Help to Buy as well. Saw a lot of more uptake and support with Help to Buy across lenders, maybe because it's more known and it's been out there for a longer period of time. So again, very much support that. One thing which I have noted, and a thing which come out from the pledges from Labour, is maybe a steer away from shared ownership as well. I've not seen that support from Labour on shared ownership. So that's something maybe to have a look at as well, rather than them going to that. So again, hopefully they'll reach out to the industry, speak with everyone across the industry, their peers, mentioned with Richard as well, maybe speak with such people and actually take steer of what is actually needed. And that's what would be really good to hear, which they take on before, the budget later in November.
And do you as lenders have a wish list of stuff that would make your job easier if there was a couple of things that could be done to make it easier to lend? What would it be?
Well, at the moment, it's stability. I think I'm sure it's not just for lenders, but everyone probably across United Kingdom at the moment is stability. By having that stability in rates, it helps us be able to be more innovative, to do things when there's a lot of work that has to go into repricing and everything. We're spending, I've never, in all my years and being in product management for the past 2 decades, I've not seen it being this turbulent time as we have done for the past 2-3 years. So we welcome stability, and I'm sure everyone else in the market will as well. That stability means we can look at things, we can be more innovative, and then come up with ways of actually helping, assisting, and being more visionary to create things rather than be reactive and having to work on that. But so first of all, stability, but also schemes as well. Big supporter of Help to Buy. Something along those seems to come back in. So really great to see mortgage guarantee scheme there. But again, really want to see the finer points of it. What is that going to be? Is it going to be just at the 95% lending, or is it going to be something which can come down and support further across as well? Something to help, get everyone moving again.
Do you think that therefore that stability you talked of and more innovation, do you think you'll see more people coming out with 95, 100% mortgages, something that little bit different?
Who knows? It could be there. I know there's various things in the process. We have seen lenders across this year. There's a couple more on the building society front. There's a couple of key leading building societies which innovation is absolutely fantastic, and really support what they've come out with as well. And I think there's more to come, more in the pipeline as well. But again, having that stability means we can build on that and get to bring out such new concepts as well. But whether it would ever go back to Northern Rock, probably not. So yeah.
Yes. Those old days. It's quite interesting. This whole point around giving first-time buyers first dibs on property. Anyone got any idea how that happens?
How do you govern that? Like, what does that look like? Is that they get a time scale to buy before the rest of the market? I don't know how. But
then, if someone then comes in with a higher offer, who's not a first-time buyer.
And for the new investors, that's not a great thing for them if that happened, is it? They've got to close their market for a little while to give first dibs or a lower market price. I don't know. I don't know how you police that. That's what I mean. I promise it's a great thing to say. But what does it actually? How do you do that? What does it mean? Richard, I'm looking at you because you.
Yeah, do you know what? I'm looking at Richard as well.
I haven't got the foggiest idea.
Come on, Rick.
Police that. I haven't got what I do. I would fundamentally disagree with it. I think we need a fairer market for all.
I agree.
It can't all be about first-time buyers. They do face the biggest challenges, particularly in higher priced areas, London and the Southeast. I agree with everything that Amanda's said in terms of some of the innovations that lenders have taken on. I think what the industry has done well over the last period of time, whether it be on first-time buyers, whether it be on green, is sort of say, well, look, we're not going to get this steer from the government. We're going to have to do some of this ourselves. And hats off to the Accords, the Tiptons, the Loughborough Building Societies, who've got great products for first-time buyers. How you police something like that suggestion, I haven't got the foggiest idea. I think there needs to be a way of ensuring that people across the market are supported, because what we've had over the last period of time is elevate first-time buyers but penalise landlords. We need a functioning private rental sector for the market to work. So just taxing it all on landlords doesn't work either. We need a proper joined up policy that is equitable and fair for all and enables home ownership. And that doesn't mean elevating one particular consumer group.
We could look to do it within the industry, not always rely on the government for first-time buyers. And I've had, I can give you 3 examples where we really struggle to help first-time buyers. And that is that if a first-time buyer wanted to buy a studio flat and it was 28 square meters in size, they can't get it because so many lenders, there's a handful in the market that will lend. And what is a first-time buyer to buy then? And I had a 2-bedroom flat right next to a station. No, we won't do it because it had an office at the bottom, but it was right next to the station. You think, well, yeah, this is a first-time buyer property.
Yeah, exactly.
And,
that's perfect,
and they won't do it. Yeah, absolutely perfect.
Yeah.
And we've struggled with that. We got it through in the end. And then flats above shops next to a food outlet. Where are first-time buyers supposed to live? If the criteria of the lenders could just open up a bit for first-time buyers to allow them to buy flats next to train stations, flats above shops and small studios, that would be a great start. So I think if we could do something there, I'm crying out for that because, you know, it's, studio, 25 square meters. What do you do? So that would be nice because especially in Surrey and London, the 2-bedroom flat next to the station I'm talking about is £350,000.
Yeah.
No single first-time buyers can buy that anyway because their income multiples don't work. They have to do it with someone else. And then the lender's saying, oh, hang on, it's near the station. That might put people off. But look, this is a first-time buyer property that, you know, this is where they should be living. Yes, it's not perfect because if it wasn't near that station and maybe a road away, because the station actually was amazing because you can get to London quickly, but it would be another £50,000 and then unaffordable. So I think we could loosen some first-time buyer criteria. That would help a lot.
Yeah,
that's really,
agree more with that.
Yeah.
Totally agree. Yeah, Michael's he had a lender decline due to there being no lift in the building, but the flat was on the ground floor. So it's interesting. Now, I'm not going to put Amanda on the spot, but Amanda, what is there more that lenders can do around the type of properties? And I understand there's a risk, and there's in say smaller studios or but really flats next to stations that might have a bit of office use or something. Should that be an issue for lenders?
It's a long-standing issue, isn't it? I myself found myself buying a property a few years ago. Suddenly, changed circumstances, became in effect, I suppose, my first property buying after a divorce. And, being in the same time as a first-time buyer, and that kind of property I could afford at that time, and was looking same things again. It was an absolute nightmare buying an apartment. It was close to, various things. So I can make sure I can feel for those customers at all. What can we do there as lenders? And the reason, because I was, I was going, well, this can't be right, and took it right to the top of that particular lender, battled my way through. But still, it's that you shouldn't be having to do that because economic sense, and that's what you'd expect for a property to be. It's what you expect that part of the market. And that actually, I bet, that's amazing property as well. You look at it with common sense hat on, but it's it's got the impact from the valuers as well, and also you've got the risk element on it. So it's not the lenders not wanting to lend. You've got all of these different factors which make the overall lending decision. And infuriating it's been, I've actually, as I just mentioned, felt it myself. I can really feel that. So we do try as lenders where possible to lend, to take that common sense approach. So when you've got lender, that's what the underwriters do as well. So we do, I'm sure we always try to lend where we can, and as I know many lenders do speak, the underwriters will speak directly with the customers as well, most and try and hold hands together and get the and try to lend as well. They're trying to lend, and where we can, we will. And I'm sure I speak for many lenders on that, but sometimes it's just too restrictive. And that approach, some of that historical approach with the risk overview on a property sometimes is hard to take, isn't it? When they don't come out with, when they basically then turn around and say no.
Yeah, it's risk people with long memories. You might have had one property that they took a bath on 20 years ago, and
but that comes back to the top-down support for the market. You know, if there is a government directive, it's give, you know, Amanda touched on it early, but give lenders stability, give them the confidence to be able to sort of change what they do. You know, we've had things that have de-risked our market. You know, MMR was more focused on the borrower, and we've got our market in a much stronger, better, more stable place in that regard. I don't think we're in the right place for confidence in property types. You know, to all the points that Amanda's just made are right. They often come down to lenders' sort of risk approach because of fears around saleability. Yeah. Given the housing shortage that we've spent half of this podcast talking about, that resaleability is unlikely to be an issue because we haven't got enough stock. Yeah. So
could you see differently? Could you see a government guarantee on housing type?
Why not? Try something new. We're not going to be able to build 1.5 million homes over 5 years. And we're back to the fixed rate point, 2 year versus 5 year. Would you want to tie in for 5 years at the moment if 1.5 million new homes are going to be built? Because it's going to be a different market.
Yeah, but there's so much pent up demand. I mean, they'll be gone like that, won't they? Yeah. So how are you all feeling then for the rest of the year? So we've had H1, we've had the first half of the year. 2023 is a distant memory. Liz Truss is now a distant memory, although still galling. And we're now looking forward. How's everyone feeling for the next 6 months, Rachel?
Super positive. Really positive. I think the last quarter is going to be, I'm going for it. I think we're going to have a big bounce after. I think get the kids back to school. That's always a thing in August. Get back the children to school. Everyone will come back off their holidays, and I think we're going to see a very good market right up to Christmas. Lots of people were waiting for not just the election, but the rates to start falling. And I think if we get that rate reduction on the 1st of August or even September, I think that will really just to keep things going. And we've already seen rates coming down. There were quite a few yesterday, some of the large lenders, and today I've seen a few emails before coming on here. So I think we're heading in a really good direction. And I think this is going to be a good end to the year and set us up for next year.
Sarah?
I completely agree. I've said 2025 is the magic year for ages. You asked my team. I've always said that would be when we can really benefit from moving forward through these times. But I think, the second half of this year is definitely going to be better than the first. That stability is going to be felt with every month that inches towards 2025. And then that refresh button will hit again, I think, in January. And we may even see some new policies or some sort of moves from the government that spike the market even more. But I'm certainly feeling positive as well, which is great.
Richard?
Yeah, totally agree. My glass is certainly not half empty. In fact, it's not even half full. It's full to brim, and I'm asking for another pint.
Your glass is always full to brim, Richard.
But no, I agree with everything that's just been said, Joe. The country was ready for change. We've got change. To a certain extent, I don't really think it matters what they do, just that they don't do what the previous lot did. But I think it's just been alluded to by both Sarah and Rachel as well. If you fast forward 2 months, we'll probably have a rate reduction. We've got pent up demand in our market. We've got lenders that are willing to lend and most crucially have innovated over the last period of time, and I think will continue to do so. And the most important thing for consumers and people getting mortgages, if you look at how absolutely bloody brilliant the intermediary market has been over the last couple of years in the most testing of circumstances, I'm confident that we have a market that is fit to support the people that want to get mortgages and help out consumers.
Yeah, 100%. Amanda?
Right. Okay. Obviously, very positive news. What we've had since Labour coming in the first couple of days. We've still got the first 100 days. It'll be really interesting to see what happens. My view on rates, though, are slightly different maybe to the rest. I'd say this might be the best which we could have for a while. Whether we're going to see, it would be great to see people, borrowers actually going, let's take, there's a lot of borrowers, I believe, have been holding back maybe with rate switches, remortgages coming up. There may not be that further rate cut or that's going to happen. So yes, we may see the Bank of England base rate cut, maybe August, maybe more likely September, but remember that's already been factored into the swaps. So don't expect that a base rate cut happening in August and September will make a huge impact on swaps. There's quite a lot of other economical factors that are happening. You've got the American elections coming up. There's been a bit of a wobble there between those two contenders, there we go. But also energy price increase may be on the cards, inflation as well, that's still a beast which has still got to be tackled. So basically, if you're looking for rates, I'm sure you'll be passing this on to your clients as well, is just take those rates now and hold on to them really. But still very positive. And again, as Sarah's saying, 2025, can we believe we're looking that far ahead now? We're looking for more this positiveness to take hold and steer us forward to a more positive future.
Yeah, I would agree. I think it's important we don't get carried away. We all got a bit carried away in January, February, didn't we? Rates are going to be 3% at the end of the year. And I think it will be slow. It will be gradual. But I think that as soon as we can have as soon as we can have a 5-year fixed rate starting with a 3, then actually things start to move. And we're not going to see rates massively come down. Maybe where do we think base rates will be at the end of next year?
At the end of next year?
Yeah.
4.5.
It's going to be
4.5.
Yeah.
But I think it's really important though to understand this is the psychology of the people watching.
100%. Yeah.
Because we know we can talk, very, very intricately, but it's the perception of the market that drives the market. And so it's how we talk, it's with the information we feed, it's the way we feed it. And the Bank of England base rate is always headline front page news. And it's the thing that people talk about. It's that, that and stamp duty, for example, they're the two things you talk over drinks with anyone who's not in the property industry when they're talking about it. So I think it's all about perception, and that's our job as brokers. Our broking teams have been through so much the last few years, and we're all very worn out from it. And I know that, people in this room are probably feeling that, but it's our job now to really, really feel that positivity and get those messages out there and give clarity as to what to expect now with a different news behind us.
Yeah. Absolutely. And if the Bank of England don't cut rates in August, certainly not September, I will be leading a charge with torches and pitchforks outside the Bank of England because they really do need to do something. We're out of time. There you go. It's just flown through.
Wonderful.
Thank you all for watching. Thanks for all your comments. Some really good comments. Thank you to our guests. Thank you, Amanda. Thank you, Rachel. Thank you, Richard. Thank you, Sarah. Brilliant guest, brilliant discussion. We have started shouting out a star broker of the week at the end of each webinar. So please tag MPowered on socials when you have seen. I'm going to sneeze, I think. That's really unprofessional. No, I'm not. I'm not going to sneeze. I was just reading that thinking, oh, God, I'm going to sneeze. No, I'm not. Right. Okay. It's gone. It's hay fever. It's hay fever season. So, yes, please tag MPowered on socials when you've seen a broker go above and beyond. You can nominate a star broker on the MPowered website today. Well done. Hello, Richard Thompson, Abbeydale Mortgages. Richard goes the extra mile for his clients, working around the clock to ensure they achieve the results they need. His dedication has built significant trust recently earning praise from a client and their family after guiding them through 2 challenging purchases and remortgages over the span of 13 years. Well done, Richard. You're a legend. Keep up the great work. Remember, we are now bi-weekly, so we're not hit it next week, but back the week after that with another amazing show. Finally, remember you can listen to all of these on Spotify podcasts. If you've enjoyed it, and I hope you have, my name has been Andrew Montlake. If you haven't enjoyed it, my name has been Jacob Rees-Mogg. Bye.